Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. Uh, we traded as high as 2039 yesterday, so I mean you're looking at essentially the um, the sixth session of new highs. Uh, we come into today. Our baseline number based upon last night's close had us still, for the fourth consecutive session, 70 handles above the 45-day pivot. That's the longest, at least in the time that I've used that metric, and it's just one tool in the toolbox. It is not the end-all be-all, because if it was the end-all be-all, we would have turned around 4 days ago, right? But since I've used that metric, this has been the longest sustained price over that 45-day pivot. So what does this mean? Does this mean we are in for some calamitous collapse? Does it mean that we're going to do Wile E. Coyote off a cliff? No. It means that we're going to... The reality of any pullback is this. We're going to go down and we're going to find a higher low, aren't we? I mean, we're talking about a higher low versus 1813. We're trading 2039. So these are the kind of days that you've really got to get off the 1 minute chart and really look at what's happening. Take advantage of a down move, but understand that the down move is going to be to establish a higher low and potentially push back up to new highs. There's simply been too much damage that's been done. I mean, the bears had their chance. Nobody can argue that the bears haven't had their chance and that the market has gone straight up. The market has not gone straight up. We had a solid 20 days of negative price action. We went down, tested, and broke the 200-day exponential moving average, and we stayed below it for five full sessions until it broke back above. We broke back above middle band, and we held it as support. Did the same thing with the 50-day exponential moving average. Then we established floors at 1962 and again at 2020. So your focus now on a pullback is, does the 20 to 21 area hold up? If it does, I wouldn't be shorting 20 to 21. You have to look to get long. Is it as much pullback as maybe some people would want? No, but that's not really what the market's about. The market's about what it does, not what you want. So pulling back from 2039 to 2020, say, and holding, well, it's not ideal, but it's almost 20 handles. So when we get there, you have to focus on, is this going to hold? Versus, oh, I want it to break. Yes, everybody would want it to break. Even the bulls would want it to break because they get a better entry level on their next trade. The market has other plans. The market has other plans. So let's assume it does break. Okay, we get below 2020 to 2021. And just as an aside, this is a lot of the stuff I'm going to be talking about on the webinar I'm doing on Thursday with Bob Lang. I am not doing some big old PowerPoint. We're gonna talk about the markets. We're gonna talk about trading, and hopefully give you guys a lot of good information about some of the techniques that I use to control risk, to stay on the right side of the trade, and to build consistency as a trader, because that's really what I'm about, and that's a lot of what the room's about. So assume 20 to 21 breaks. I think at that point, the best you're going to get is probably 2,000 is the round number. Okay? And there's a lot of bumps along the way that we'll talk about on the webcast if we get below that area. But for now, just focus on 20 to 21, see if that floor holds up. If that floor becomes a double bottom, then it continues to be advantage bulls. I just don't want people getting ahead of themselves as we, gap down a little bit this morning and start thinking, oh, we're going right back to, 50, 100 handles down. It's just, maybe we are, but at this point in time, and this is the only point in time we can concern ourselves with as traders, at this point in time, that is not a reasonable expectation. So if you are short from above, you need to take profits on the way down, roll down your stops, and control your risk. If you've been long the whole way, You should only have a runner left on your position. You should not be heavy long up here. We have been sustained for 4 days above Crazy Town, above 70 handles over the 45-day pivot. You should be all but out of your longs and just have a runner left to be working the last few days. Don't get greedy. Don't get greedy is when you round trip a perfectly good trade. Okay, that's all I got. Check out the website, PrincetonTrader.com. Check us out on Twitter, @PrincetonTrader. Come check out the chat room. We would love to have you. We've got new people starting. It's a good time to start. I'll be back tomorrow morning with another webcast. Trade them well.